We will now discuss the first component of financial statements, which is statement of financial position. Investors, creditors, management, and other users analyze the statement of financial position to evaluate an entity's liquidity, solvency, and the need for additional financing. As the name suggests, a statement of financial position is a formal statement showing the three elements comprising financial position, namely, first is assets, second is liabilities, and third is equity. Let us now discuss one by one each of these elements of financial position, and let's start with assets. Assets are resources controlled by the entity as a result of a past transaction or event from which future economic benefits are expected to flow to the entity. The cost of an asset can be measured reliably. Assets are classified into two, namely, first is current assets, and second is non-current assets. Current assets are those used within an entity's operating cycle. The operating cycle of an entity is the time between the acquisition of assets for processing and their realization in cash or cash equivalents. When the entity's normal operating cycle cannot be clearly identified, its duration is assumed to be 12 months. IAS 1 paragraph 66 provides that an entity shall classify an asset as current when first is when the asset is cash or cash equivalent unless it is restricted from being exchanged or used to settle a liability for at least 12 months after the reporting period. Second is when the entity holds the asset primarily for the purpose of trading. Third is when the entity expects to realize the asset within 12 months after the reporting period, and fourth is when the entity expects to realize the asset or intends to sell or consume it within the entity's normal operating cycle. IAS 1 paragraph 66 provides then the non-current assets as all other assets not classified as current. Stated differently, all other assets not included in the definition of current assets are classified as non-current. Liabilities are defined as present obligations of an entity arising from past transactions or events, the settlement of which is expected to result in an outflow from the entity of resources embodying economic benefits. Liabilities are classified into two, namely, first is current liabilities, and second is non-current liabilities. IAS 1 paragraph 69 provides that an entity shall classify a liability as current when first is when the entity expects to settle the liability within the entity's normal operating cycle. Second is when the entity holds the liability for the purpose of trading. Third is when the liability is due to be settled within 12 months after the reporting period, and fourth is when the entity does not have an unconditional right to defer the settlement of the liability for at least 12 months after the reporting period. IAS 1 paragraph 69 defines then the non-current liabilities as those not classified as current. Equity is the residual interest in the assets of an entity after deducting all of its liabilities. In other words, it is the entity's net assets or total assets less liabilities. Depending on the form of an entity, the following are the terms used for an equity. 1. Owner's equity in a sole proprietorship. 2. Partner's equity in a partnership. 3. Stockholders' equity or shareholders' equity in a corporation. Here then are the required line items in the Statement of Financial Position in line with IAS 1 paragraph 54. First is cash and cash equivalents. Second is financial assets other than cash and cash equivalents, trade and other receivables, and investment in associates accounted under the equity method. Third is trade and other receivables. Fourth is inventories. Fifth is property, plant and equipment. Sixth is investment in associates accounted for by the equity method. Seventh is intangible assets. Eighth is investment property. Ninth is biological assets. 10th is total of assets classified as held for sale and assets included in disposal group classified as held for sale. 11th is trade and other payables. 12th is current tax liability. 13th is deferred tax asset and deferred tax liability. 14th is provisions. 15th is financial liabilities, other than trade and other payables and provisions. 16th is liabilities included in disposal group classified as held for sale. 17th is non-controlling interest, and 18th is share capital and reserve. Financial statements can be presented under the two forms below. First is in a report form. This form presents the three major sections in a downward sequence of assets, liabilities, and equity. You can check on this illustrative example of statement of financial position using the report form. Second is in an account form. This presents the assets to the left side while liabilities and equity to the right side of the statement of financial position. You can check on this illustrative example of statement of financial position using the account form. Guys, be ready for a short quiz about this topic. See you on the next video.